Hello, I'm Jon Schonberg, Chief Investment Officer of Stonebridge Capital Advisors. Today I have with me Mike Dashner, Director of Equities, and Jon Lynn, our Director of Fixed Income. Beyond management of portfolios, we really enjoy serving our clients, and one of the ways we serve and to serve better is to educate them on our investment process and what that means for them. So today we really want to talk about four different things. One, what does customized investment portfolios mean to you as a client? Two, what is our research process? How do we decide which stocks or bonds that we're purchasing on your behalf? The third would be how we then apply that investment process to the management of the portfolios. And then lastly, how we manage portfolios through crisis. The first thing we want to discuss further with you today is what we mean by customized investment solutions. And it all starts with the client and the uniqueness of each individual client that we have at Stonebridge. Clients can range from individual investors to foundations and endowments to corporate clients. It all comes down to the unique needs of the clients and then customizing using our equity strategies and our fixed income strategies in building a portfolio that really meets their unique needs. To talk a little bit further about the customization of the equity portfolios, I'll have Mike Dashner fill you in on that.
Thanks, Jon. And like Jon said, the first thing on crafting a customized portfolio is really knowing the client, okay? And so the first steps are developing our investment objectives and risk tolerances for the client. And right after that comes the asset allocation. And that's really the first big block in customization and portfolio management and creation. And so once we get the allocation figured out, when I say allocation, I mean how much of the portfolio we're going to allocate toward fixed income and how much are we going to allocate toward equity. And so once we have the equity piece carved out, we run three main equity strategies at Stonebridge, but most importantly, each one of those strategies can be fine-tuned to fit the client's ultimate investment objectives and goals. And what do I mean by that? We can take a look at the equity strategy, and first level down is the sector level. A good example of sector level is energy, finance, technology. And a client might have specific restrictions or specific requests for us to focus on or away from sectors. And so that's the first level of customization when it comes to our equity management. The next level down are the actual individual holdings. And so we can customize portfolios to run a particular equity strategy, but avoid or focus on individual companies inside that portfolio. And there can be a number of reasons why we customize at the actual individual security level. A good example is someone might have a very low cost basis, meaning they've owned a particular security for a long period of time. And wholesaling that out of the portfolio would give the client an immediate tax bill. And so we can incorporate those securities into our broader equity management and making sure that we're looking for the best long-term objective for the client and customizing the portfolio at the individual security level.
Yeah, I think another great example is a lot of clients have very strong personal beliefs and things that they either really are in favor of and have passion about, or things that they are very against. It could be a foundation that deals with children that struggle with drugs and alcohol, and they may have a strong belief in their own process that they do not want to purchase securities that deal in alcohol or tobacco. So that's really the equity side. At this point, let's turn it over to Jon Lynn to talk about how we customize the fixed income side of portfolios.
Yeah, so we have two basic strategies on the fixed income side at Stonebridge. One is taxable and the other is tax exempt. If you look at the makeup of a portfolio within either of those strategies, while they might include different types of securities, they're going to be similar in the way that they're diversified across sectors and individual credits. I think what really kind of differentiates us and puts us apart from maybe other money managers similar to us is that we really try to tailor the maturity structure around each client's individual liquidity needs. What that could look like for an individual that comes to us that has very short-term needs, liquidity, it may look more like a cash management account for us where it's very short dated securities. We also have clients that really are looking for more stability in their portfolio. So, we would probably structure a portfolio around keeping a moderate duration that's going to stabilize prices a little bit more. So that would be short to intermediate term bonds. And then we could also have an investor that just really wants to max out on yield and feels that the highest yielding bonds that they can get, whether it be 25 or 30 years, is just fine for them.
Thanks, John. I think the bottom line is when it comes down to customized investment solutions, we really try to tailor portfolios using individual stocks and individual bonds, not packaged passive ETF strategies. And that really allows us to take that level of customization really down to meet those individual and unique needs of all of our clients. The next thing we'd like to discuss is our research process at Stonebridge. We take the process so seriously that we have multiple meetings every single week. We have a Monday morning meeting where we discuss new accounts that have come in and how we're investing that money. We have a dedicated research meeting on Wednesdays where we talk about each of our strategies, the names that we own in those strategies, and what our investment thesis is on every single name in the portfolio. And then we have another meeting on Thursdays where we bring in the broader team and talk about the names that we want to add or subtract from the portfolio and get some feedback from the broader portfolio management team to really make decisions on buying and selling individual names. I would say that the average amount of time we spend on every name that we put in a portfolio is measured in hours, not in minutes. And that's very important for clients to know how dedicated we are to that research process. So to further that, again, I'd like Mike to talk a little bit about the equity research process and how we analyze the stocks that we have in portfolios.
Sure. Thank you, John. So specifically on the equity side, there are two main camps that we operate in. One is idea generation, names that we are going to potentially put in portfolios. And the other is idea maintenance, names we've already invested in. And so we have to spend a tremendous amount of time in both camps to make sure we have our arms wrapped around all the securities we own and we're fulfilling our investment objectives in each one of our equity strategies. It's very important for us and our clients to remember we're long-term investors. And the key there is filtering out the noise that doesn't matter and figuring out what does matter. And that means we're constantly reviewing our thesis on each underlying name, and we're constantly challenging ourselves to make sure the ship is headed in the right direction.
Thanks for that, Mike. That was a great explanation. Many clients call us and say, what are you doing? I think a recession's coming. What are you doing to protect my portfolio? We've already taken a look at that, and in many cases already made the investments that will benefit in that type of environment. And with that said, I'll turn it over to Jon Lynn to talk about our fixed income research process.
Well, thanks, John. Actually, our research process on the fixed income side is really quite similar to the process we have on the equity side. I mean, we're really focused on high quality, good, solid companies. When we're looking through and doing our fundamental analysis on the fixed income side, we're really looking at not just a credit rating, but we want to look at that issuer's collateral. What's their capacity to repay that debt? What are bondholder covenants and other security provisions? And then we have, any number of different credit metrics that we look at to really affirm our creditworthiness that we see in an issuer, whether it be leverage, interest coverage, or other such financial ratios. That's really what we're looking at, beyond just a credit rating and beyond what we might see as the structure of a bond, whether it be the coupon payment or the maturity date.
Now that we've talked about our customized investment solutions and our research process, the next step is to talk about the implementation of those in our investment process. This is very important, and it starts with the team that we've built at Stonebridge. When a client comes in the door, they have multiple people, portfolio managers, relationship managers, and client service people that they all know that client, and they all know the objectives that client has for the management of their portfolio. The second is really the methodical approach that we take to investing. Clients always have a question when they come in the door: how soon is my money going to be put to work? Our answer is different for every single client. Number one, are you coming to us with all cash that we need to put to work over time? Or are you transferring in assets in kind, which do you have a fully built portfolio that we are now transitioning? In both cases, we tell clients it takes about 3 to 6 months from the day they walk in the door to the fully transitioned portfolio at Stonebridge. The bottom line is every name we own in portfolios isn't a buy today. And I think that's really important. We don't take new assets and new money and say, oh, you're buying all these stocks today no matter what. Stocks go up and down. Many stocks today aren't attractive to us. They're attractive for 3 to 5 years, but they've had a huge move up. Same thing on the bond side. There are bonds that are attractive today. So it's very important to know that we take that investment process seriously and we take our time to implement our strategy inside the portfolio. The last thing we'd like to discuss today is how we manage investment portfolios through crisis events. And for that, I'm going to turn it over to Mike to take this one.
Thanks, John. So managing through a crisis starts long before the crisis surfaces. And what I mean by that is we take it upon ourselves to structure our clients' portfolios for the long term. And that means understanding our clients' investment objectives, risk tolerance, and investment horizon. So once we have the portfolio appropriately structured, we take into account potential economic growth and potential economic turbulence that we might see throughout the life of the portfolio. Now, remember, markets go up 95% of the time, and so we don't want to get too bearish where we don't participate in any of the upside. But really, market exposure comes down to the individual client. If done appropriately, and we have an unexpected shock in the economy, we've set the portfolio and client up to the point we might be able to take advantage of these market hiccups. We want to make sure we're setting our clients up for success, both in times of market expansion and market contraction. Jon Lynn, do you have any updates on how we should manage portfolios in crisis on the fixed income side?
Well, thanks, Mike. What I will add on the fixed income side, one of those ways that we do set up portfolios is that we take a very long-term approach. So if our outlook anticipates, say, the Federal Reserve raising interest rates and that kind of a shock to a typical bond portfolio, what we might do is reduce the risk of that happening by, lowering duration over time ahead of that. But, outside of that, we really view market shocks as an opportunity to either pick up equities at cheap prices or bonds at high rates of return. So.
Great, John. Thanks for that, and Mike. We really appreciate you joining us today. It all comes down to knowing your client and really nailing down at the beginning of a relationship what the true investment objectives are. So I hope that helps, and we really appreciate you and having confidence in our portfolio management. Thanks.